Hey, what's up guys? John here. Mortgage rates are now at a 16-year high. A 16-year high supported by record high inflation, food inflation. Cost of living is going through the roof in just about every element of our life. Everything is more expensive, and we're now seeing 52% of all employers scheduling layoffs. I believe we are going to be walking into a once-in-a-lifetime opportunity to invest in real estate, to grow and scale a company. I mean, you look at some of these big companies, for example, that have been founded during recessions like Airbnb and Microsoft, LinkedIn, a ton. Amazon was founded. A lot of really big companies were founded during the problematic periods. Even Coors Light, Fortune magazine was founded right after the 1929 recession. A lot of these great companies are founded during the hard times because a lot of their competitors get wiped out because they're too leveraged. And the real valuable companies, the businesses, the entities that are really supplying value to the market, they really thrive during these types of moments. And I believe it's going to be very true with real estate investors. In this video, I'm going to walk you through exactly what's going on in the housing market. Where should I see things going? Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what is really going on in the housing market and in the economy. Take a look at this. Mortgage rates rise, reach another 16-year high. A 16-year high. Look at rates. So, for example, if you have the average credit score in America, which is between 680 and 699, the average is 698, then this would fit the category right here, 7.747%, right? If you have perfect credit, 800, it's 7.497%. And if you have bad credit, 8.125%, in the eights. The credit is so important, especially as we start to step into these times, because what's going to happen, these lending institutions, they're not going to be lending money like they once used to. And the cost to borrow money is going to get more expensive, especially for consumers that have credit, in the 600s. You definitely want to be north of 720 as we move into this type of economic climate. Look at these headlines. Home prices are falling fastest in these 10 U.S. cities. No housing market is immune to home price declines. Rising mortgage rates are sending home prices lower. This is only just the beginning. And to put this in a context, let's say, for example, you bought a $500,000 property last year. You put $100,000 down, 20%. And you got a 3% mortgage. 3% mortgage, your monthly payment is $2,179. $2,179. The average rental in America right now is $2,002. So, for basically the same price, an extra $150, but you have to take into consideration you're paying down principal on your loan and you have tax incentives, so it's probably cheaper to have entered this property. However, now 7.497%, this is based on perfect credit. So 800, 7497, that payment is $3,289, right? The difference between the two is an extra $1,100 per month, meaning that borrower would likely have they'd have to make about $3,000 a month extra just to afford the same property. $3,000 a month. So you start to think about how expensive that is. That's basically, if you're making $120,000 a year, you would need that same income today to be able to buy what you could have bought for $80,000 a year, $80,000 a year in salary just a few months ago. And the difference between the two properties, that $1,109 or $1,109 monthly payment is $117,000 in purchasing power that's being reduced from the buyer. So this is what I think is very likely going to happen here in the housing market. I believe what we're going to start to see is a few things. We're going to start to see these layoffs starting to take place, and we're going to ultimately watch a lot of people that used to use their home as a piggy bank to refinance through the hard times to take some money in. They're going to have a harder time doing it when rates are in the 7s or maybe even the 8s. And so as that begins to happen, people are going to start to either list their homes for rent or they're going to sell them. That's what's going to happen. But as rates are rising, there's going to be a smaller pool of buyers. Now, if there's a smaller pool of buyers and there's more sellers, what's ultimately going to happen? Prices are going to continue going down. And what I believe is going to happen is we're going to have a multi-pronged approach here. We're going to start to see people selling, not just because they can't refinance their way out of this, but also because of the layoffs and also because a lot of retirees that thought that, I had enough money to make it through retirement. Now they can't. And they're not going to be able to refinance their way out of it. They may rent their property, but they might also be forced to sell. We're going to start to see so much inventory come on the market. That's why I believe right now, probably the smartest time for anyone that's thinking about buying real estate to come up with a game plan, to come up with a really good game plan. Because if you're renting, this is probably the best situation for you because of a couple things that are going to be happening here. So first and foremost, one of the biggest segments of the real estate market that was hit the most, mom and pop property owners, the 2 to 4plexes. These people that own 1 duplex or a 4plex, in a single family home, they have generally traditional business models. Their business is impacted. They're not making as much money. Inflation's really hit them. And now they have this property. Maybe they have tenants that are not paying rent. But that type of situation would be an ideal scenario for you if you're renting. Let's say, for example, you're spending $1,500 a month in rent and you're able to go buy a triplex or a 4plex. The mortgage lender would look at the net income of that building plus what you're making to help you qualify to buy one of those properties. So if you could buy one of those properties and live in one of the units, and one of the adjacent units is allowing you to save money and the other 2 units are paying down the debt service on the building, you'd put yourself in a position to not only having $1,500 a month going outflow to rent, but you'd be living rent-free, plus one of those units would be tucking money aside for you every single month as you worked and saved more money. So you'd be able to invest and invest and invest. This is what's ultimately going to happen. The aspiring entrepreneurs, they're going to thrive, regardless of what the headlines say. The smart always thrive. They always do well. It's the ones that don't plan, they don't anticipate, they always act surprised when the writing's all over the wall. Look at what's happening all over the world. People can't connect the dots that things are going to get hard here. I don't know what to say. I've been talking about this on these videos for a very long time, saying that, we're going to be stepping into recession, we're going to be stepping into problems. Some people prepared, some people listened, some people, thought it was entertaining, or they thought it was fear-mongering. But the reality is, this is what's happening. I said rates were going to continue to go up. I said the market was going to change. I called the top of the market Q3, Q4, 2021. I'm telling you what's likely going to happen very soon. This affordability crisis that we're in now, we've seen nothing yet. It's going to get much, much worse. So if you're looking to take advantage of distressed opportunities, you're looking to grow and scale a company, this is the moment to do it. This is the moment to study and build out a plan for that. If you need to fix your credit, we'd love to help you at CashNow.Video. You can also DM us on Instagram at CashNow.Video, your first name and your phone number. We'll have Erica give you a call, a free consultation. But people really need to pay attention to this, because this wealth transfer is going to happen once in our lifetime. This is going to be bigger, I believe, than 2008. Because what I think is ultimately going to be happening here is I believe that we are going to start to see these traditional business models get completely eroded, many of them. And we're going to start to see tech and innovation start to come in. We're going to see so much change come to this economy over the next few years that the smart and aspiring entrepreneurs changing with it, they're getting in front of it, they're positioning themselves for this, and they're going to make an absolute fortune. But a lot of people are simply not, because they're going to pretend as though it's not happening. Unfortunately, it is what it is. I am going to be taking advantage of this situation, as all capitalists and all entrepreneurs should. Always take advantage and always be, moving in the direction of opportunity, never standing still and just kind of waiting for the world to happen in front of you. Move with it. Change the world for the better. I believe what is happening right now, there's going to be some opportunities for a lot of smart and aspiring entrepreneurs to do just that and improve the world for many people. What do you think about this entire situation? I believe that the opportunity coming for real estate is going to be unbelievable. So much money to be made. It's going to be ridiculous. What do you think? Drop below, hit the like button, subscribe here. Subscribe also on my second channel. It's an interactive call-in show and a podcast. Last couple shows I had some private equity guys talking about real estate and investing, and very soon I'm going to have some more great guests, probably this Thursday. So subscribe there if you are interested in personal finance, real estate, and and also let me know if you prefer any specific guests on that channel down in the comment section, and maybe my team will do some outreach and we'll bring some people on the show. But let me know, do you think that we're stepping into a once-in-a-lifetime opportunity in the real estate market? The numbers suggest so. The numbers are suggesting that this affordability crisis is going to price so many people out of their properties, and we're really going to see a ton of inventory. And I don't think the smart, deep-pocketed, cash-heavy private equity firms are going to run out there buying these deals. I think what they're going to likely do now is sit and wait until the blood is just all over the streets, and then at that point they're going to start stepping in and buying properties by the thousands. That's what I think is going to happen. But I don't think they're going to run prematurely. I think they're going to wait to really see this pain hit. So get ready, get prepared, build out a plan. This once-in-a-lifetime opportunity is coming. It's coming very, very soon. I'll catch you guys in the next video.